But I want to hopefully record a few sessions where I can put them on my YouTube. That's one way I get new subscribers. I get my word out because I can show real classes, really questions answered, and stock market stuff being talked about on my YouTube channel. So if we do continue, and I hope we do, hopefully we can put some of these sessions on my YouTube.
Sure. Yeah.
Okay.
Great. Okay. No more questions from me. Thank you for that background. Appreciate it.
Thank you, Evan. Welcome to Retire into the Stock Market. We're going to do 12 classes, an hour each class and session. And I'd like to get all your questions answered, but also show you the way that I've learned how to retire and the stock market trades and applications which work for me.
Great.
You have any more questions for me?
Yeah, one just popped up. You said you were able to retire at January 1st, 2001.
Yeah.
How long were you dealing with stocks to get to that level for you? 5 years, 10 years?
Well, let's see. At that point, I was 30. So, and when I was 18, I started. So, 12.
Well, 12 years. Yeah.
Hang on, that's not right. I was 30. So, what's that in 88? 12 years. But you know, I had some trials after that. So I think I mastered these techniques I'm going to show you even later, like in the last, like 10 years after that, you know. So it's like a continual learning experience for me.
Got it.
I would say that, really, I say that I've gotten really good like in the last 10 years, and I've been mentoring like for the last, 5, really good.
Got it. How many
I'm making it more like what's that?
Approximately how many students have you had that went through your course?
Maybe not that many, maybe 30 or 40.
Okay.
But I think not all of them have applied these trades and used these principles. Unfortunately, I think a lot of them go for the knowledge, but then they never apply it. So I hope you do apply it.
Right.
So that's up to you.
Okay.
But I'm here to help.
Thank you.
Okay, so the first thing I want to talk about is mentoring. Like what I'm here is to show you my style, my approach, my philosophies, and also the trades. And you're not going to get this from anywhere else online or from school or from a book, because a lot of these things I've fashioned myself. So you're not going to get that validation from what we're doing until you start applying it. You will hear people say, "You can't do that. That's not going to work." So be ready for that. Okay, you won't really be able to get what I'm going to show you anywhere else. So just keep in mind that what I want to say is try it on for size and see if you can apply it to make it work for you. That's really it. I can't vouch for any of the teachers. People ask me what books do I read when I start. Don't read books. Just let me show you how I do it, and that's all I can vouch for. I can't. Whatever else you get out there, I don't know about that. It depends on that person. He may have a different philosophy. He may have a different mindset. So that's why. And some of these things are going to be like reverse psychology, almost like I'm going to tell you to do stuff that doesn't make sense because maybe you were taught different. So just for a little while, just unlearn what you've learned and just start fresh. Okay, everything clean slate. Okay.
Okay.
For example, I'm not big on diversifying. So that's one thing. Like people, you have to diversify. Don't probably egg in one basket. But when you start out, you can start with 1 or 2 stocks or 3 stocks. You don't have to diversify everything. Because we're gonna pick B stocks. We're gonna vet our stocks. So diversifying is not like one of the major teachings, for example. I like to focus on certain stocks to get certain income. Oh, and what I specialize in is earning income to live off of, to pay your bills and to live off your account. Make sense?
Yes.
So like the first thing I'm gonna put is trading versus investing.
Okay.
And I'm gonna put colon, live off your account. Okay. So like when I talk about trading and investing, a lot of people have the understanding that trading and investing are kind of equal, though. And so certain people do like investing long term, for example, buying stock or holding it long term, and then people can trade. Like if you buy Tesla, if I have $1,000, I can buy a share of Tesla right now. Then if it goes up to 1,100, I can sell it for $100. Okay, and then I made $100, right? And that's kind of the same as investing, though investing, doing it long term. So these two things are equal. They're really not equal. Okay, so I favor trading over investing. Okay, because like for example, a trader has that money once he sells that share of Tesla. Let's say it goes up, that money is in his hand. That money's in your hand, and you can use that $100 to pay bills, to buy food, for example, and then go back and do another trade, and then make money that way. The investor who has Tesla at 1,000, it goes into 1,100. They have a value. They have an account value of 1,100. While that is a nice thing, you can't pay bills with that. You can't live off your account. All you're doing is having an account and putting that long term, which is growing. Let's say even if it grows exponentially, at no point could you pay your bills with that. If you did that, then you become a trader because then you have to sell shares, right? So I rate trading higher than investing in the sense that even if you don't make the same money, like if an investor makes $100 and a trader makes $100, it's better off as a trader because the trader, again, can take that money and live off their account, where the investor is just stuck in the account. You know, if you were to start selling shares as an investor, eventually you would be left with 0 shares. So that's not really even a method, right? But as a trader, for example, so the first one is to trade stocks. Okay, that's one. Then the next thing here I'm going to teach you is to write covered calls. Have you heard about that?
Mm-hmm. I've heard of those.
Right, so we have 100 shares of Tesla. That's 100,000, okay?
Mm-hmm.
And then we write one call for next month. So this is December, so we write January. So we write the next month coming up following. So in December, we write January. In January, we write February, right? When they say write, it's really sell. So you can write and you put parentheses sell. That's how you explain write. So if Tesla's 1,000, we write, let's say, for example, 1,050 for January.
Mm-hmm.
That's the strike. Can you write that down, strike? You know what a strike is?
Yes.
Great. Okay, so that's another thing. I'm gonna show you how about the option chain. So right here, option chain. Okay. So we have to pull up the option chain on the stock to get the option prices, right? So here we have 1,000 shares, 100 shares of Tesla for 100,000, and we look at the 150 strike, and let's say they pay $60, okay, which is 60 on the bid. There's a bid and an ask. Bid left side, ask right side. Bid is what you sell, price. Ask is what's the buy price, right? Ask. So then for 1 month, it's going to pay us $60 if we sell the 1,050, which means we agree to sell the stock at 1,050. So that means that we can get share growth, means the stock can go up and we can make money. And if stock goes up past 1,050, we get the 50 points of share growth. And then also we get this 60 points of premium. And the 60 points of premium is $6,000. Write that down. 60 points is $6,000. Normally, like for a small option, it's like 1 point or 2 points, $1, $2. And you multiply that times 100 shares. Does that make sense? We also call it a contract. Write down contract.
Yes.
Put equals 100 shares.
Mm-hmm.
And if I say write the cover call, put CC for cover call, CC. We have to strike 1,050 for January. And if it says 60 points, then 60 is equals 6,000. Put $6,000. Okay. If it's 6 points, which is what we get on Apple, it's $600. Put 6 equals 600. 60 equals 6,000. Okay. Now, Tesla's a big cover call. I'm not going to want you to write that right away, but that's like if you have a goal, a great trade, write the Tesla cover call because it pays great and it's a great stock. And I would bet the stock's probably going to triple the next few years, I think. And it pays great income. For example, there's a lot of other stocks, AMD. I'll give you some stocks: AMD, Advanced Micro Devices, Advanced Micro Devices, Apple, AAPL, Apple Computer, and let's say NVIDIA, NVIDIA. And then we mentioned Tesla, TSLA, Tesla. So there's 4 stocks right there for you. Let me give you one more. Whitehorse, WHF, Whitehorse, Financial. Now here's 5 stocks. The 5th stock, Whitehorse, is a dividend stock. Dividends are good because I call that like getting money while you sleep. Just you get the stock, you get the dividend. And that's like kind of like free money, So if we never meet again, you have 5 stocks that are excellent. And that's worth money right there. Okay, now
that's going to cover. Find these on your own research?
Yes, okay. And I'll show you how I did that. But write those down. Back on the cover call. So we have 100 shares. Our plan is to hold on to these 100 shares. Stock's going to go up and down. But the difference in the cover call is you're getting paid basically to rent out your shares to the public. Because what you're doing, you have the shares, you create an option when you sell the option, and then you sell those to the option buyers. But really, you're just pressing.
I lost your video. Hello. Okay, you're back.
I got a call. Let me just do a quick text.
Yeah, go ahead.
To my wife.
Go ahead. I'll do the same.
Wait 1 minute. Today I have an art class for my daughter, so I got to leave around 3. But I think we're a few minutes late, so I owe you a little time. Okay.
No problem. Very casual. Let me answer this real quick. Also, hold on. I'm gonna.
So, if you take this 6,000 we're getting, right? What I do, we're gonna get the return on this for a month. So I take 60. You can go 60 divided by the price of 1,000, right, for Tesla. It's a little more than 1,000, but I'm just using this as a figure because it's going to change, right? So what I do, this is how I find out how much we're going to make. You do 60 divided by 1,000, 6%. Make sense? Now, here's some important principles, real basic, right? You understand how we got that number?
Yes. Now, what do you call it? 60 again? Is it 60 points? You call it 60 points?
Yeah, 60 points, $60, or the option contract pays 60. And if it pays 6, it's 600, like I said with Apple. But if it's Tesla, it's 60, which is 6,000, right? So divide the 60 by the share price, and that gives you the percentage return. And that means that we're going to make 6% for 1 month. Does that make sense? So if we can make 6% in a month, how much can we make in a year?
6 times 12.
Yeah. But let's not. This is one thing I want to teach you. Never say guarantee in the market. Never. There's no promises. There's no absolute guarantees. So what I like to do, instead of trying to do it 12 times, do it 10 times a year. Okay. So I say 6% times 10 equals 60% return.
Okay. 60%.
Now, yeah. Okay. Now, you probably won't even make that, because what's going to happen is Tesla's going to shoot up, and your stock's going to sell at 10,000 at 1,050, and then what will happen is you'll have to buy the shares higher. Let's say you buy the shares at 1,100, then you do another cover call, or the stock may go down to 900, then you're out $100, which is basically like $10,000, because it's going to go down to 90,000 value. And then, it's nice to make I'm sorry, not 90. You're out 10,000 at 100,000. It goes from 100,000 to 90,000. So you're out 10%, and you get 6% on the premium. So really, you're still down 4%. You follow me? So it's like a give take. The stock's going to go up and down, but on top of that, you're getting this 6% return every month. So the theory behind this, the philosophy is, even though the stock may go down some months or go up some months, the income is going to stay consistent, right? So whatever the stock does, we're going to add, 6% a month in this case on your investment. Make sense? So, and that's the magic of the trade, is that as long as you press, right cover call, you're going to get that income. It's going to drop right into your account. You can use that right away to buy shares. You can use it to just leave it there, or you can use it to buy more stocks, for example, or you can write a check. I have check writing in my account, and then I pay my bills with that. In this case, 6,000, right? Any questions on that?
Nope. Can
you pull up an option chain right now?
Pull up what?
An option chain?
An option chain. I don't know what that is. Options.
Like if you have your stock market account, you go to the stock and you click on options.
Oh yeah, okay. I'll click on it right
now. Let's do Tesla. Let's confirm it. Okay.
Okay.
Now, here's the thing. It's almost January. Okay. So it's really going to be like 3 weeks, 3.5 weeks, not really 4 weeks. So it'll probably pay less, right? Because we don't have the full month, But I want to make sure you can do this. We're not just talking about, we're not just writing it down. I'll make sure you can do this. So pull up Tesla and pull up the option chain, and then look for January. And give me the stock price.
Yeah, I see right there, option chain right here. Okay, so it's 1,088.47 right now. It says alert, watch, and option chain.
So I put Tesla, TSLA, 1,088, and then let's look at what?
And 47 cents.
47 cents, good. Let's look at because it's 88. Let's look at 1,120. That gives us like 32 points of premium, 1120
So
for January. And when I say monthly, that's the monthly option we're looking at. We're not looking at the weeklies. Do you have it where it's broken down into weeks and months? I just want to do the monthly. Ignore the weekly options, okay?
let's see, where's the calls, puts, strikes, weekly?
So we're on the calls. It's going to be the monthly, which is going to be, I think, this 20th. Let me
Yeah,
check
I
right
don't
now.
see the monthly option on here.
It's going to be January. Listen, the monthly option is always the third Friday. So it's going to be January 21st. The first Friday is 7th. Okay. The 7th Friday is the 14th. Those are weeklies. And then the third Friday is the 21st. Okay.
Okay.
So what's the 21st strike? That's the monthly. January 21st.
December 30th. Wait.
Pull up the 1120.
So I'm on, let's see. Calls, I'm not sure. Can you see what I have?
Yeah, so you don't want to click. Is that Fidelity?
What's that?
Is that Fidelity?
That's Fidelity, yes.
Don't you have a list of the options in a row, not just one option?
Whoops, let's see.
Like the list of the options, like down in a row.
Yeah, is it like this right here?
Yeah, like that. That's what I want to see.
Okay.
So can you pull up? Do you see 1120 strike?
Oh, I see what you're saying. I'm just gonna scroll. Okay, 11.
You have to scroll all the way down.
Yeah, I got it.
Because Tesla has so many. I'll be here waiting a minute until you get all the way down to 1120.
I got 14th and I have 28th. Oh, maybe because I at the top I put the. Hold on, let me.
Wait, what did you say?
Sorry.
If you put the settings on view all options.
Okay, I got it.
Sometimes I'll show you 50.
I got it.
View all options.
I got it. Yes. Got it.
Okay, great. Now, can you pull up the 1120?
1120. What do you mean? 11?
In the middle, there's a strike. And the strike is the 1120 for January 21st.
It goes up to 1110. Goes up to 1110, not 1120.
Okay, so if you look up right above, what you're showing is certain options, right? But you want to see all the options, okay? So go up to your settings. There should be a little wheel right on top, and it should say view all. You see it?
Not yet. I'm looking here. View. See, oh, wait. Option change. Updating.
There's a settings bar. There should be a settings bar on that page. And I mean, on TD Ameritrade, the setting bar is there's a little wheel, and you just click. You can put 50 options.
I can go to TD Ameritrade America.
Do you have your account ready in TD Ameritrade?
I will have to log into it. Let's see.
Show me your phone one more time. Okay. Do you have maybe settings in the bottom corner? Is there a wheel somewhere? Is there a wheel somewhere?
I do not see a wheel. Let me try that again. Watch this.
So we can do. Here's the thing. We can do the 1110 rather. But like, there's like deliberate things for what I do, and I want to show you the right one. So,
let me see.
But you know, in this case, we can just do the 1110 because what does that mean? That means that we buy the shares at 1188, and we agree to sell them at 1,110. So that gives us 22 points of share growth. Okay.
Okay.
Write this down. Share growth. So 1,088 to 1,110 equals 22 points.
Okay, do you just forget about the pennies?
Yes, for now, yes.
Okay.
The pennies are important, but I'm not, when I teach you, it's just faster to show you the dollars.
Got it.
So we put 22 points, share growth. Yeah, so here's something for you to do. Call your broker. Tell me you want to walk you through your phone app how to see all the options. You're just showing the top 50. You want to see all the options.
Okay.
Right. And if for that reason that doesn't work, next time we're going to use your TD app. So I can actually tell you exactly where to go on the TD app because I do TD.
Let me go pull that. I have that account. Let me pull that up real quick.
Before you do that, just give me the price of the 1,110. The bid and the ask.
Okay.
Because you had it there.
Yeah. Is it 77? I'm not sure if I know how to read this. On 110 right there.
Okay, hold it still.
Sorry.
So Sirius is down 4 points. I don't want to see that. I want to see the numbers to the left. You can listen. Let me look at me for a second.
Yeah.
You can slide it over to see the bid. I don't want to see that where it says 530 down 5 points. I want to see that. I'm going to see the bid and the ask.
Okay, got it. Yeah, okay. Yes. Bid and ask. Okay, the bid is 77.50. Says size is 5. And then the ask.
Don't look at size, just bid and ask.
Okay, bid 77.50. Ask is 78.80.
Okay, then I'm gonna explain something to you.
Okay.
Write this down in your journal.
Okay.
The option chain is your paycheck.
Is your what?
Is your paycheck.
Paycheck. Okay.
The option chain is your paycheck.
Okay. Option chain
is your paycheck. Why? It tells you exactly what you're gonna make if you have the shares and write the cover call. Or in this case, or in another case, the puts. But we're gonna do the calls today. We're not doing puts, maybe later on. Okay. So it tells you bid 77.50, ask 78.80. Now you just gave us a raise because according to this, we're gonna make 77, which is $7,750. That's what that means.
Okay.
For 100 shares of Tesla, writing the cover call for January, which is not even a full month. So from January to February, you probably get more. But in this case, we're gonna accept 77.50 points. So we're agreeing to sell it for 1,110.
Mm-hmm.
So what am I saying? You buy the shares at 1,088, write the cover call, just put write one or sell one call January 21st, which is the monthly. And you're gonna get the bid, which is 77.50. So now we go the return. 77.50 divided by 1,088. That's even higher than 6% bid. Let me see.
77.50.
77.50 divided by 1,088. 7.12%. 7.12%. So you just got to raise, my friend. You're getting 7.12% to do that cover call, and you can do that every month. Okay. Now, in my mind, I tell myself, hey, that's 77% a year because I multiply by 10. But I don't say by 12 because there's times when you're not going to be able to write the cover call because for whatever reason the price isn't right. We'll get into that later. But for the most part, you can always write the cover call because you're getting more money or less money. And sometimes, like I said, the stock might come down to 900. You got to deal with that, or it can go up to 1,200. The shares will sell. Look, if the stock goes up to 1,200, the shares will sell at 1,088. Okay, sell. And you're gonna get. I'm sorry, I made a mistake. You buy that 1,088. The shares will sell at 1,110. So you're gonna get 22 points of share growth, which means $2,200. Write it down. 22 points of share growth equals $2,200.
Can you back up again real quick? I'm sorry.
22 points of share growth
22.
equals $2,200.
Okay. Share growth equals 2,200, right? Because you times by 1,000.
By 100.
By 100. Okay.
Hey, you can multiply by 1,000. You need 10 contracts. That's $1 million. If you get $1 million, it's going to be 22,000.
Okay.
But on 100,000 on 100 shares of Tesla, it's going to be 2,200. Okay. So X 100. It's always 100.
Mm-hmm.
And then 7750 equals $7,750. So you add those two together, 7,750 plus 2,200, 7,750. We're gonna make 9,950, almost $10,000, 9,950. Okay, which is 9.9%, 9.95%. You know, so it's a little more. Here's the thing. That may not happen. The stock may come down a little bit, and that may not happen at all. So I never count share growth. Okay, I only count the premium. And what the option chain tells you, go ahead.
You don't count the share growth, right?
I don't bet on it. You can write it down. You can say I might get this much, but you're probably not, because It's not always going to go up to that price. Okay. But the premium will hit your account the moment you press the right color call. So I'm counting the 7750. For January, we're going to do it again in February. It might be 60 points. It might be 80 points. It might be 70 points. It might be 7%, might be 5%, might be 6%, because it kind of goes up and down. But whatever it's going to pay, that's going to be your income. That's going to be the money you live off of. Okay? Okay. Make sense? Questions?
Yeah.
Okay, so you know how to pull up the option chain. You know how much they're going to pay you. And this is the income that we're going to get to live off of. Now, the reason why this is better, again, than long-term investing, because long-term investors don't have income. There's no income. You have to sell shares. And if they start selling shares, you're going to eventually have no shares. So that's not really a plan, okay? Covered calls, CCs, are income. So you have these shares, and you're getting income on these shares every month. And, you know, people ask me, why don't more people do this? You know, because they don't know how to. This is why I'm here, man. I'm your mentor, you know?
Right. Yeah. I have a friend that does this, and yeah, he was talking about Tesla last year. I mean, he's got a lot more money than I do. He said, oh yeah, one day he made 300,000 a day, and another day he lost 800,000. he's got a lot more money than I do. So.
Okay, let me say something. You mentioned losing money. Okay, here's the thing. Yes, you can lose a lot of money in the stock market, but here's the thing. I want to show you how to do safe trades. Write that down. Safe trades. I opened up with buy Tesla for $1,100, sell it for $1,200, you make $100. I opened up with that, but here's the thing. That's a risky trade, and I'm not going to teach you how to do that right away. What I'm going to teach you how to do as your foundation, put this down, foundation is CCs, covered calls, and dividends. Okay.
Okay.
Foundation, okay? If you can get a foundation of getting covered calls and dividends, that's your income. Now, on the number 3, that's 1 and 2. That's 1 and then 2. Put number 1, number 2. Number 3 is trading. Now, technically, a covered call is a trade, but I don't like to say trading because when people say trading, day trading, you know, we don't do day trading. I don't want to tell you, that's like the most risky thing ever. We do monthly trading. So number 3, put monthly trading. What does monthly trading mean? Basically, the idea is you do 1 trade a month, you know. You can do 2 or 3 trades a month, but the idea is that you're going to like wait for the right time to do 1 trade a month. Write this down. 1 trade per month. Okay, and you can put plus. So now let me explain that. Okay. That's number 3, trading. Number trading, like I said, it's risky, right? So what you're gonna do, you're gonna wait for the right time to trade. Okay. And you're going to wait for all you know, wait for the stock to, let's say, an example, stock to come down, for example, or you wait for the right time the stock's going to come up, or you're going to wait for the earnings report, whatever it is that you're going to trade, you're going to wait for the opportune time. Okay, and then you're going to, when the time comes, you're going to execute your trade. Okay, so you're going to wait, patience, put down patience. Now, if you're a day trader, maybe your patience will be waiting to do maybe 1 trade a day, okay, instead of like 100 trades. Like, the thing is, like, the reason people like lose money in stock is because they get a lot of money, they start day trading, and there's really no rhyme or reason what they're doing. They're just kind of gambling, right? But if you eliminated, Ivan, if you eliminate all your unsure trades and you focus on just 1 trade, you want to make this trade count, then what you're doing, you're increasing your chances of winning. Is what you're doing. You're eliminating all the nonsense trades that you're not sure about, and you're waiting for the one trade that you think is going to work the best. Does that make sense? Does that make sense?
Yes.
So it's patience, it's timing, it's discipline. You know, I mean, you've heard all this. I'm not.
Right.
I'm just repeating this junk you read in books.
No, that's good.
But there's really a point to it. But I'm gonna give you a story, okay? And we can end with this. But if you have any questions, I want to answer your questions. Let's say you're a money manager. You manage, I don't know, a couple $1 million, and your boss is named Mr. Morgan. And Mr. Morgan, he doesn't trade. He hires traders, right? And your job is to manage money. You know, he gives you some IRAs from one of his companies he owns, and your job is to make money, right? And you're a trader, so you have a little, you know, office in a Florida building. And Mr. Morgan, you know, he doesn't come in that often. He's, let's say you're in LA, and he's in New York, in the New York office, and your supervisor comes up to you and says, Ivan, here's the thing. Mr. Morgan's flying in from New York, and you're like one of our top money managers. And he says, Ivan, I have some losses in the LA office. I need to explain that, okay? Mr. Morgan's flying in from New York, and he's going to watch you trade. And this is important. I want you to do what I want you to do. On Monday, he'll be on Monday. On Monday, I want you to make 1 trade, okay? And Mr. Morgan's going to watch you, by the way. And if you make more than 1 trade and you lose money, I'm going to fire you. He says, I'm not going to fire you because I don't like you. I do like you a lot. I'm going to fire you because if you lose money, that's my ass. Okay? So the whole point is you need to make money. So what are you going to do? Mr. Morgan's going to fly in from New York. He's going to watch you trade. And you need to make the most accurate trade you can. You got to wait for the right time. You can wait for the whatever. But we're not throwing darts at the board. We're not gambling. We're not guessing, okay? So that's the mindset I want you to have when you make a trade, that you're doing the right thing, that you're waiting for the right time, that this is gonna, you have a plan. You have a plan, you know, like for the Tesla plan, it dips to 1100, buy it. The plan is to get out at 1200 and you sell it. It's a plan, right? That may not happen. Maybe you have to sell, instead of 100 points, you can make 50 points, you know? But the point is, if you have a plan, you execute your plan. So the cover calls is kind of easy because you're just kind of owning the shares and you get the premium automatically, you know. But later on, if I was to tell you that you get more money when the stock swings up. So if Tesla's 1088, I think it was down today a few points. But if Tesla goes up, let's say 10 points, Tesla 1088, I'm gonna put plus 12. to 1,100 to 1,100. That's when you want to write the cover call, when it swings up. So put an arrow up, CC, right? CC when stock swings up. Put a star. Tesla, 1,088 plus 12 equals 1,100. Write CC when stock swings up. Why? Because when the stock is up, the call options are up and you get more money. That's why. So it's a more successful trade. You're still going to make 77 points, but when it swings up, it's probably going to be 80 points you're going to make. So it's like you're improving the trade. Understand? So when I say patience, discipline, all this, you're waiting for the right time to take a regular trade and improve the trade. So when the stock swings up, that's when you want to write your cover calls, and you're going to go from, let's say, 77 points, 7,700 to 8,000, 80 points. And that makes a big difference over time. Okay? Make sense?
Yes.
I want you to review this session. I'm going to send it to you. And you just have to log into your Zoom. And then I want you to download it and then save it in your computer so you can go back over it. Okay? Because basically we set like sort of a stage for cover calls. I'll talk about dividends next session, and I'll talk about trading them later on in the session. But I got your 5 stocks. We covered cover calls. We covered the difference between trading and investing. While investing is nice to have money in your account, you can't touch it really, you know. But if you're trading, cover calls, dividends, those are income coming in. That's income. So that's different. And if you're able to trade on a stock, buy low, sell high, for example, that's income. It's cash in hand. It's different than having an investment account that just goes up that you're looking at a distance, right? Okay, questions?
Yeah, my friend who wanted to lost out, he said there's a way to buy insurance too. So that's probably another session. If the stock goes down, you can also make money because you're buying insurance. You provide
Yes, yes. I call it a hedge. Put down hedge, H-E-D-G-E, hedge. What that generally is, that's
a
hedge, like a hedgehog. What that is put options.
Okay.
Now, it's called insurance too. It's not so easy because when you buy put options, you're spending money, right? So it has to make sense, you know. It's not just we can buy insurance and, you know, something happens, insurance pays. There's certain ways to do it. It's very, it's like a delicate trade. So I'll show you that, you know, I can show that, you know, soon.
Okay. All right.
Your homework is to write over these notes very nicely in your journal, and then take a picture and send me that on my text message to know you did the homework. And I'm gonna send you this video. Please download it and save it. We can go over it. And then if you have any questions, just text me or call me or email me. And don't email me because I won't see it right away, but you can text me. And then let's do the next session next week.
Okay.
Tuesday?
Yeah, actually next week's not good. I'm on vacation. We're going to Jackson Hole.
So want to do one more session on a Friday? Are you getting this? Do you want to slow down? Want to speed up?
No, I would like, before I rewrite this, I would like to see the video so I can go over again and write the notes really neat.
Yes.
So, yeah, let's see, Friday.
So.
Yeah, Friday.
Saturday better?
Yeah, you work Saturdays too? Sure. Yeah, let's do Saturday. I'll give you Friday to do the work.
I don't really work that much.
I know. I want to be like you.
Saturday, 2 o'clock, same time?
Sure, Saturday at 2.
Let's shoot for Saturday at 2. That should work. And
if it changes, I'll let you know ASAP. But yeah.
Thank you, Ivan. I appreciate you.
Thank you. I appreciate you.
You know how to get a hold of me. We'll see you again Saturday, 2 to 3.
Sounds good. Thank you. Appreciate it.
Thank you, Ivan. God bless.
All right. Bye-bye.